Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como and today is the 28th of April. All right, we had a bit of a down day in markets today. Let's get into what is happening in the marketplace. Today we saw canola down $5.90 a ton to settle at $695.90. It was a pretty volatile day today, or maybe not volatile, but choppy day in the canola market. We saw at points where the market was up, points the market was down. Anyway, let me get through this pricing before we get into the canola. Minneapolis wheat fell 9.5 cents to 5.96 and 3/4. Kansas wheat fell 11.25 to 5.39 and 3/4. Chicago wheat fell 14 cents to 5.31. Soybeans actually eked out a gain at 3.25 to get to 10.63. These are all on the July, by the way. Corn up or down 2.25 to 483.30, and the Canadian dollar remains relatively stable at about 72.25 or just above 72 cents at this time. All right, let's get into a little bit more detailed view of the wheat markets here. Just kind of wanted to show this just to show where we saw most of the weakness today. As you can see, the Chicago wheat complex saw losses anywhere from 2.2 to 2.4, 2.7 on the front month. So a relatively weak day in Chicago. I think today was one of those days where our Chicago was the leader. It dragged down the other wheat markets, although there are some things in Kansas that are bearish on their own. Minneapolis, though, I think is going along for the ride. As you can see, the losses are not as large from a percentage standpoint. I wouldn't call that a positive, but it is, we'll get into some charting here, but it is showcasing that the winter wheat complex is definitely taking the brunt of the weakness here today. All right, let's get into, this is what July Chicago wheat looked like on the daily chart today. We saw a new low posted. It closed at a new low today. These are relatively bearish chart formations or chart developments. If we want to know where we may be able to see some support here, if we pull back to the weekly nearby here on Chicago, you can see in August we saw a low of 514.25. So that may be where we are kind of headed ultimately. Not that that's very far from where we're at, 15 or so cents when looking at the front month or the nearby contracts before we get to those support levels. If we break down below that, that would be considerably more concerning. As we get into a look at the similar chart for hardwood winter wheat, the weekly low here, 527.25. We're currently trading 539 and 3/4, 539.5, I think, on the nearby hardwood winter. So we got a little bit more weakness here before we hit support, but I think at this point, it looks like Chicago is the one leading. If we take a look at Minneapolis, this is a daily chart. We have not broken down below the daily chart support or the as of yet. So the low here is just below just below 590. It looks like here. So not that I think that this support is going to be important for Minneapolis. I think if the winter wheat complex decides to push lower, I think the support here on the Minneapolis chart will eventually or will, prove to be pretty meaningless. I think if the rest of the wheat complex is going to push lower on this weakness. All right. If you haven't already, please subscribe to our insights. We publish weekly reports. We publish ad hoc reports when something important happens in the market. We publish strategy ideas. We give recommendations on when to market, and it's great. It's $99 a month. You can cancel anytime. We're not going to try to sell you anything else. So subscribe and help us get our business off the ground here. Just to give you an idea, we've kind of put some. This is an example of our weekly report from last week where we talked about weather. We talked about where canola was going to go, and we even had a little bit on soybeans as well. So make sure you subscribe. Go to CanadianAgMarkets.com/subscribe and click the subscribe button to get started. All right, let's get more in depth into the canola charts here. Canola, again, had a volatile or choppy day that ended up producing a new recent high of about 704.80 and then bouncing back and forth between gains and losses to end the day in the red at 696.40. The chart resistance here, which is this blue line way up here, is at 711.70. We do also have some convergence here now of the 20-day moving average and this trend line. I think that produces some pretty strong area of support. Currently, that's down near about 665. Um, it does feel that this market is looking at $700 as a bit of a resistance barrier at this point. The choppiness today would suggest that there was a pretty even number of buyers and sellers in the marketplace. And once support got hit on the daily chart today, we saw it kind of bounce back and then sellers stepped in. So, kind of this yin and yang happening today. It'll be interesting to see ultimately what directional bias wins this. Right now, the trend, if the trend is your friend, is up. So at least I think, it's safe to put out there that you'd want to predict something in the 710 to 711 range. Whether it breaks above that or not is yet to be seen. But that is how the canola chart looks like today. We did see some releases from Statistics Canada today. One of that was crush data, which showed that March of this year was the second largest crush month for canola in history at 1.024 million tons, and that's of seed crushed. This is second only to October here of this year, when over 1.1 million tons of seed was crushed. Overall, a very good year for canola crush. We have also now reached 7.8 million tons of cumulative crush for this crop year. Again, that's as of the end of March. We are well on pace for a record crush this year. I did explain in a recent canola fundamentals report that we had put out that we had put 10.8 million tons of crush into our S&D. I did mention that this was conservative numbers or just outright wrong, given the way Statistics Canada has also reported production. So what we did in our S&D assessment was we kind of took a little bit out of everything. We took a little bit out of production, or we added a little bit to production. We took a little bit out of crush. We took a little bit out of exports to try to make the S&D balance. Otherwise, I was getting a zero carryout or a negative carryout in some cases. So I do think I'm more biased on the potential for there to be more production out there. But there may come a time too, as the prices have been rising, that we start to see some demand rationing as well. Just to kind of talk a little bit about farm stocks, we also saw producer deliveries reported by Statistics Canada today. In March, 1.462 million tons of canola was delivered by farmers. Cumulatively for the 2025 calendar year, so that'd be January, February, and March, we saw 5.260 million tons had been delivered. Back in February, Statistics Canada also released the December 31st farm stocks, which reported that there was 9.885 million tons left in farm bins. That's not counting commercials, but just farm bins. So if you take the 9.885 million, subtract the 5.260 that's been delivered so far in the first quarter of the year, you arrive at 4.624 million tons, which is what this red or orange bar on this chart represents. This is a pretty small on-farm stocks number historically, especially when the production year was not a drought or really a major production disaster. So this is unique, and it definitely feels out there that stocks are tight. The elevators, the crushers are having to increase their bids in order to open up the bin doors. I think in some key areas surrounding crush plants, there's very little supply left in farm bins. So it's creating a tight situation. The situation in Canada for canola is tight. And if demand wasn't as robust as it is, I think it would feel fine. But because demand is so high right now for both crush and for exports, it is making the difference. Demand is making the difference, and we are seeing tight stocks as a result. Okay, switching gears over to wheat. We saw wheat crop conditions rise today in the crop condition ratings report. Overall, in the U.S., crop condition ratings good to excellent rose from 45% to 47% good to excellent. That was widely expected by the trade. I saw some expectations reports out before the release, and that was pretty much expected. Here's what Kansas did. It went from 41 to 47, so increased by 6 percentage points. As you can see, we've made up most of that large drop that happened in the early part of April, which was a bit of a surprise. But again, the market didn't really react to that. It does seem to be reacting to this type of crop condition ratings now as we move well above averages. We saw some rain come into that area of the U.S. And just to kind of show a map here, here's where the bulk of the increases came from was from the U.S. Midwest and the South Plains. So we also see a lot of winter wheat grown up here in the Pacific Northwest and Idaho and Washington, et cetera. So a lot of really large growing areas in the U.S. Had increases in crop condition ratings. Looks like the market front run that and sunk to new lows today. So if you're looking for a scapegoat, it could be the rains and condition improvements that happened. All right, looking into Canadian weather here in the next 7 days. This map hasn't changed a lot since Friday when I put this video out. Still, not a lot of precipitation in most of Western Canada. I think there's, some tepid optimism currently about the state of moisture. I think soil moisture isn't terrible. I think farmers are getting into the fields and seeding, and they're not having moisture in the field issues. So I think that's a positive. But we will need to see the precipitation forecast change as we move towards the end of seeding in order to give us some confidence on crop growth. All right, one more elephant in the room to talk about before we finish up. That's the Canadian federal election. Here's the polling results updated today from 338 Canada. They are currently projecting a Liberal majority with 186 seats. That's a pretty definitive Liberal majority. And they're expecting the Conservatives to come in at 124 seats. I think don't quote me on this, but I think the Bloc in this is expected to lose some seats in Quebec and gain them, and the Liberals are to gain there. So there's some expectation there that the Liberals will pick up some seats there. Ontario looks to be going overwhelmingly Liberal as well, and the West is a bit of a blue wave. What is surprising is actually some of the Conservative momentum that's happened in BC and at the expense of the NDP. So I don't know. This has been a very interesting election. I think our neighbor and the president of our neighbor, Mr. Trump, had a tremendous amount of sway in the market or in the way our election was perceived, and that may have hurt the Conservatives in the long term. I think Carney coming in as a candidate was a brilliant move on the Liberal part. It definitely swayed public opinion. I think it looks like most Canadians have a favorable opinion of Mark Carney overall. And that's just how the cookie crumbles, I guess. We may have another 4 or 5 years of Liberal government if those polls are correct. So I know I'll be glued to the TV later on this evening. You might be as well, or maybe not. I don't know. Anyway, have a great day. We'll see you again tomorrow. Ciao for now.